India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It is a Tuesday morning. Rains continue and it's a rainy, wet morning. Pleasant, I must add. We'll, of course, track markets. The cabinet, we know the composition of the cabinet now. There is continuity, and I think that's a big talking point for markets this morning. I'm Prashant. With me, my colleagues, Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. It's only Tuesday, Prashant.
Yeah.
Okay.
Pleasant weather, but here in Mumbai.
It is pleasant. Yeah. It is pleasant and much better than what we've had over the last many weeks now. But, you know, what's the weather for the market looking like? I think that's what we try and kind of tell you every day in the morning. It's not looking bad. It may look like that global cues, etc., a little sort of stacked up against us. But I think the big takeaway for the market is going to be what I said. Still, the political sort of, a circle coming together in a decent way. There is continuity. I'll get to that in just a bit. So yesterday we saw a bit of a pause and the Nifty took a halt. It's been a spectacular market, rocketing higher. Can't have 1.5–2% days every day. We were saying this yesterday. And we ended flat, 30 points lower, really. But it was a daily negative close, which we've not had for the last 3–4 sessions now. Now, FIIs were biased for the second straight session. If you can have the graphics up, yeah. So 7,000 crores in the last 2 sessions. So it's slow, it's small on a daily basis compared to the quantum of selling that we've had. But 2 days in a row now, they've bought. So let's see and hope this holds. Now, most key ministers return in the NDA. If you look at the sort of big four ministries, home, finance, etc., there is continuity. And I think that is good news. That is unambiguously positive. The worry at the margin, of course, was that the BJP, because it needs its allies, the JDU and the TDP, will have to give away some of these important ministries. Not the top 2 or 3, but even, actually, if you look at the top 5–6 ministries, there is very little change except maybe the power ministry. This is the cabinet, which I think markets have seen for the last 5 years, 10 years, and that continues for another 5 years as well. So, able hands, experienced hands, and not very much dilution in terms of the power, especially with regards to running some of these individual ministries. So now markets, of course, the composition is the same, not very much change, but will there be change in priority, focus areas, etc., if any? I think that's the next thing. And naturally, for example, yesterday there was that Kisan Nidhi program, there was the talk about the rural sort of housing scheme, crores of houses to be built, the government sort of going to support that. And what else? I think this is going to be the focus area in terms of this new particular government. And if there is any change, I don't think the markets are expecting any change. It's expecting more of the same in terms of the policy thrust as well. Overnight, you had equities which were higher. Nasdaq ended about 1/3% up. The 10-year bond yield was up 3 basis points. It's rallied 18 basis points in 2 sessions. We are back around $4.5 index. Flat but above 105 levels. Oil prices are the big mover. Actually, if you want to sort of pick out one thing, it's oil. 3% back at about $82 a barrel. And we've come up from 76, 77 very, very recently. So that's at the margin a bit of a negative. The big events are, of course, the CPI, the core CPI specifically out of the US, and FOMC, which is tomorrow. Later in the evening. They are top of mind events for the market. Now, where do we go from here for the market? Typically and ideally, there should be a bit more consolidation, sideways movement. Is it going to be a deeper pullback? That's a very tough question to answer. It'll evolve. It'll have to, the price action will have to tell us over the next couple of days. So I'm just going to leave you with some supports for the market. So support for the Nifty comes in around 22,900. That's the 40 hourly exponential moving. The 40 hourly exponential moving average is 22,939. And the first support comes in at 22,900. The 20-day comes in at 22,676. That is still a little below where we closed yesterday. Now, Bank Nifty supports come in at the same 40 hourly exponential, which is 49,328. And if the Bank Nifty were to move a little sideways, we essentially are looking at targets closer to 48,900. On the way up, I mean, I think both for the Nifty and the Bank Nifty, it's pretty decided. For the Nifty Bank, it should be yesterday's high and then, of course, the all-time high, which is 133. My gut feeling is that I don't think we will see any deeper pullback in that sense. It's going to be largely a healthy screen over the next couple of days as well, with enough participation as far as broader markets are concerned. GIFT Nifty up on your screen. We're getting a 40-odd point higher start at about 23,287. Surabhi.
Pullback, Prashant, I guess when you have that tidal wave of money coming in month after month, 34,000 crores in domestic mutual funds at last count, I guess that's why we know that pullbacks are so shallow and all the dips are literally getting bought. On oil, just want to make that point that it's still holding. It wasn't a flash in the pan kind of a move because even now, Brent prices are above 81 and the chatter obviously has been a little about US summer driving demand. That's one, and there's some talk in the market about US perhaps buying more to build up its reserves. And that kind of kept prices elevated. Goldman Sachs, by the way, thinks that oil, the upper range this year could be 90, and it's expecting oil to remain firm and inch up a little bit as we get into the third quarter of the calendar year. So that's on oil. Yields are also elevated. So, I mean, basically, we're not looking at a very great global backdrop, but then the thing with this market is that dips are getting bought, so let's see if that continues to play out. I just thought I'll quickly, get our producers to help us with putting up the pictures. The old guard, that continues, absolutely no changes. And some of the new faces that have come in. Now, these are ministries which are very critical to markets. I mean, they're very closely linked to economic policy, financial policy. So let's get the names going. Of course, the top ones don't change. Finance remains with Nirmala Sitharaman. Defense, we know defense is absolutely critical the way these stocks have been moving. The companies in focus, Rajnath Singh. Commerce and industry remains with Piyush Goyal. Highways, absolute continuity, right? Mr. Gadkari comes back on. Railways and this huge phenomenal change in the approach that we've seen in Modi 2.0, will that continue under Mr. Ashwini Vaishnav? The minister stays on. He also has electronics and IT, and petroleum and natural gas continues with Mr. Hardeep Puri. Some of the new faces, and again, these are ministries which are important from a market perspective. So health goes to Mr. JP Nadda. He also has chemicals and fertilizers. Housing and urban affairs, these, additional 2 crore houses, 3 crore houses that one is expecting Modi 3.0 to roll out. Manohar Lal makes an entry over there. And he also has power, which is another very, very critical ministry. Civil aviation has seen the change. Mr. Jyotiraditya Scindia is no longer, in charge of that. Mohan Naidu makes his entry there. And he's, by the way, also, I think, he's one of the youngest ministers in the cabinet as well, just about 35 or 36 years old. And coal and mines goes to G. Kishan Reddy, again, important from a market perspective. So these are some of the new faces, but the big heavyweight ministries, there's absolutely no change. So the market will continue to expect continuity. So I guess, Nigel, I think from a political standpoint, after this, I think we can really go back to business as usual. Here and there, if there are, political overtures and, those typical coalition politics that plays out, we'll see. But in terms of overall policy, I don't think now anything changes at this point.
Well, that's right. And we'll also keep an eye out to see what the Fed has to say, right?
Absolutely.
We get the outcome tomorrow. For the time being, irrespective of what the equity markets are doing, some of those other asset classes, they are in wait and watch mode. Whether you're looking the US bond yields, the, Brent crude prices have perked up a little bit, and the dollar index is quite strong if you compare it with what we saw on Friday. So the troika, well, that is reasonably strong. What did the FIs do in yesterday's trading session? Well, they added long positions. Close to around 17,000 contracts is what they added. And they covered close to around 33,000 short contracts. So the swing factor out here is close to around 50,000 contracts. And if we pull up a chart, you'll see that the FIs, they have been gradually, covering their short position. Just a few trading sessions ago, it was around 3.5 lakh contracts. And now, in fact, it's come down to around 1.4 lakh contracts. On the flip side, if you're looking at the client positioning, well, that was net long, close to around 3.3 lakh contracts. This is the client positioning has come down. So they have cut a bit of those long positions. So we have seen some of those clients which had taken a long stance at the start of this contract, well, they have gradually been, unwinding some of the long positions, and there is some short covering that we have seen as well. Moving to the options data, you pull up two strikes out here, the 23,500 call and the 23,000 put. Both of them have seen a fair bit of open interest build up, which brings us to the levels. Just plugging in these numbers, you'll get a broad sense in terms of where the Nifty can consolidate just in the near term. Near-term resistance will be yesterday's high because we came off that high point of the day. So 23,412 approximately, that's the number I'm looking at. As for the options data, 23,600. That'll be an important mark. So that's both the resistance zones you're looking at. But in terms of support, since the 23,000 put has seen a fair bit of open interest, a couple of sessions ago, the premium out there was closer on 200 rupees. So you just plug that number in, 22,800 becomes a very, very crucial zone. And the 20 DMA, that as well as your reference point, 22,671. Today, we'll keep an eye on the Nifty Financial Services Index. That plays out the weekly expiry. So that could move a little bit, particularly in the last hour of trade. The sector that I'm looking at today is the railway stocks. As you mentioned, we have Mr. Ashwini Vaishnav, who's retained the railways, IB, as well as information technology. So, the street was fearing continuity. Now, that's happened. So I'll keep an eye on a couple of these government-owned companies, IRCON, RVNL. They should be in focus in today's trading session because the last few sessions, the street was a little bit nervous, particularly on the railways portfolio. That could be the sector of the day.
Okay, all right, Nigel, thanks. And you come back here. Let's see how the market reads into this, given the interesting appointments that we saw last evening. Let's move on then to the equity call of the morning. Jonathan Garner of Morgan Stanley says India remains a secular opportunity with the BJP-led coalition likely to redouble its focus on growth rather than shift towards redistribution. He expects volatility to settle back down as evidence that the pillars of macro stability remain upright going into cabinet formation and the July budget. He says India remains first ranked in their Asia-Pacific ex-Japan emerging market allocation framework with key exposures in their focus list including ICICI Bank, Maruti Suzuki, GAIL and Godrej Properties.
Okay, so money market views next. We have Abhishek Goenka of India Forex and Asset Management who says that US May jobs numbers coming in stronger than expected, caused the rupee to give up gains as US rates firmed up and the dollar strengthened overall. He says we have the US May CPI and the Fed rate decision both on Wednesday this week. And of course, we'll see what the Fed dot plot tells us. The press conference will be closely watched as well. He expects the rupee to be between 82.7 to 83.7 over the medium term.
On bonds, Vishal Goenka of India Bonds says that bond yields continue to trade higher in the long end. Post-election results and possible fiscal slippage. He says this week it's all about important inflation numbers with CPI numbers due from US and India as well as the FOMC meeting for further cues on international rates. He says with the announcement of the same finance minister, there could be some relief from the continuation of policy perspective. He expects the 10-year benchmark bond yield to trade in a range of 7.01 to 7.06% today.
Well, a lot of stock-specific action track for you. We get to that in just a bit in our special top 10 segment. For the time being, though, let's run you through the list. We're looking at cement stocks, RVNL, Vodafone Idea, JBM Auto, we have Poonawalla FinCorp. All of them will be reacting to positive news flow, and we have 5 apiece. 5 reacting to positive news flow and 5 to negative news flow. So IRB, Honasa, Interglobe Aviation, TRIL, and KIOCL will be reacting to negative news flow.